Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Stock market fails to hold record highs today on profit booking in the last hour. Sensex and Nifty touching all-time high levels and topping 66,000 in intraday trade. Elon Musk's Tesla is in talks to set up a gigafactory in India. Tesla is expected to roll out 500,000 e-vehicles in a year. TCS CEO N. Ganapathy Subramaniam, in an exclusive interaction with BTTV Siddharth Zarabi, says double-digit growth for the year seems difficult. Wipro Q1 misses street estimates, sees headcount decline for the third consecutive quarter, ends Q1 FY24 with 7,163 fewer employees. Revenue Secretary Sanjay Malhotra tells BTTV that there won't be any rollback of the 28% GST announced on e-gaming and casinos. Says revenue generation will get a huge boost. Prime Minister Modi begins two-day France visit. All eyes on big-ticket announcements on the defence front, including India's procurement of 26 Rafale M fighters and additional Scorpion submarines for the Navy, and a deal to jointly develop an aircraft engine in India. It was a historic day on D Street as the Sensex crossed 66,000 mark for the first time in intraday trade. However, the Sensex Nifty and Mid-Cap Index failed to hold record levels at close as profit booking took over. The Nifty advanced 30-odd points to close the day 19,413, and the Sensex closed the day at 65,558. Top gainers today: TCS, Hindalco, Infosys, Tech Mahindra and Bajaj Finserv. The top laggards: Power Grid, Coal India, UPL, Maruti and BPCL. What lies ahead of this rally as Sensex crossed 66,000? For more on this, we're joined by Devang Mehta, Director Equity Advisory at Spark Private Wealth. Devang, a good day for the markets, even though we did see profit booking set in. Which way are we headed, and when are we going to see the 1 lakh figure?
Thanks, Abha, for having me on the show. I think, yes, it's an historic day, and I think this month has sort of been historic, records after records, and I always love to say that sort of records are made to be broken, be it cricket or be it markets. So ideally, yes, there are the confluence of factors. If we look at all the fundamental factors, be it macros amongst the global dark clouds, I think we have had a lot of great run for Indian macros, be it tax collection, direct tax collection, GST collection, political stability, micros like earnings growth, cash flows, a lot of deleveraging of companies' balance sheets. I think a lot of bank balance sheets are also cleaned up, as well as we are seeing credit growth, capex, consumption. I think most of these factors are pointing towards one, an economic recovery. Second, a good sort of a recovery in terms of even market levels. Ideally, in the last 4-5 years, we always sort of seen 18,000, 18,500. This time it has sort of crossed that magical mark. But again, I would not put much impetus into that magical number. It is very important that for the factors that we discussed, are earnings going to come? Is liquidity still going to flow into the Indian markets? Are the retail investors enthused? Are the HNI community, mutual funds, PMSs, all of them are sort of getting into the groove as such, the economic growth. Market growth is also sort of going to come up. So my sense is, yes, these numbers are sort of optically elusive. Don't put your sight on those type of numbers. But yes, I think more or less we feel that markets from here on also have sort of legs to go up with 5-7% corrections. Absent corrections will always be part of a bull run.
Sure. So Devang, what is your strategy then going forward? Are you also, taking some chips off the table, reallocating? Are you now eyeing mid-caps? Are you sticking with the frontline stocks? So what's your strategy?
I think, yes, what we currently feel, Abha, is that the markets are presenting you with an opportunity to get out of certain businesses which are so-called debts, which probably have run the course in this rally, not on merit. But some of these companies have probably been a sort of bad memories in your portfolio. So it's time to revisit the portfolio, sort of look back at the elements which will do very well, buy companies which are probably giving you that market leading advantage, or companies which are market leader franchises, companies which have high ROE, ROC, good corporate governance, good PAT, EBITDA and revenue growth, and come out of companies which sort of at this point of time also are not able to service their interest costs. So typically, yes, the themes that we are trying to play are more or less some of those are credit growth related themes. So BFSI as a sector, few private banks, couple of PSU banks. There are companies in the universe of AMCs, wealth management houses. As a financialization theme gains prominence, this is one part of the portfolio you shouldn't ideally miss. The second part of the portfolio is more or less capex driven, right? So capital expenditure right now, we are seeing brownfield, greenfield project expansion. There is fiscal expenditure by the government. Even private sector is doing a lot of capex. So capital good companies, infra/cement. Auto has come out of a long hibernation after a long time, and we see a lot of these trends probably over the next 3-5 years being more structural rather than cyclical. So I think these are the themes which we would sort of play, advise clients to play.
Devang, that's where we leave it on the show today. Thanks so much for watching and giving us that quick take on what's happening with markets. Now, 3 of the big 4 IT firms in India report muted Q1 earnings. Companies are telling BTTV why they're seeing a slowdown, sharing both the outlook on the demand side as well as on the hiring side. Here's what top bosses at TCS, HCL Tech and Wipro had to say.
What seems to have been a slowest start, one of the slowest starts to a fiscal year. How is the quarter being? Take us through some of the highlight numbers, Mr. Subramanian.
I agree, it's one of the slowest starts we have had in several years as Q1. But then given the recessionary trends and the macroeconomic situation that everyone is talking about, we are pretty pleased with what we accomplished during the last 90 days. The order book of $10.2 billion on top of the $10 billion that we made in the previous quarter shows that we stay relevant, our offerings are well accepted in the market. And revenue came flat sequentially, while on a constant currency basis, we grew by 7% year on year. We completed the performance appraisal of all our employees, 600,000 of them. And we have completed the annual increment process effective 1st of April. That's again a big accomplishment for us. And overall, I think we have met with a lot of our customers.
Your dependence, I won't use the word over-dependence because the US is still the largest economy. On the US market, do you see it being offset?
US will continue to do well. And especially, US is investing heavily on innovation. They want to really work on the future of technology, like, 2 nanometers and things like that. Semiconductor technology is something that they want to invest very heavily. And they also want to take the lead on the next G, which is the 6G technologies. And then there's a lot of effort that's going on in the North America. And I think, there is a lot of discussion that's happening between India and North America to see how we can collaborate on critical and emerging technologies of the future. It means that, look, it should give us really a good base to collaborate with the innovators and large corporations in North America.
What is the outlook as far as demand is concerned? And therefore, do you see a double-digit growth happening in the remaining quarters and for the full year?
There are segments in which, we have done well. I think, for us, manufacturing is looking good. Life sciences, healthcare is looking good. Our regional markets and platforms business are really have done well, over a year-on-year basis. So there are businesses and markets which are growing on double digits. But as a company, given the growth that we have seen in Q1, the double-digit growth for the whole year is something that we have to wait and watch. It looks a little difficult.
Do you see any opportunities beyond the current one in telecom, also because of the government's focus on 6G? It's already been mentioned by the government and the communications minister several times. Do you see any further opportunities? Recently launched a generative AI business offering called TCS Generative AI Enterprise Adoption. Explain this to us because it's a new thing. May not be a very big part of the portfolio, but what's the intent here?
I think generative AI as a software is a our technology is very interesting. It has a lot of potential. I think consumers like you and me, we already start to use it, and we are amazed at the capability that and the potential it has. But then when you take some of these into an enterprise level, there are always constraints. There are always things that, what you can do with it and how you can do it with it. Keeping in mind the overall cost involved, as well as make sure that the organizational competence and competitive advantage are always protected, right? There's certain things that you want to keep it within the company, certain things that you want to export it in the public domain, right?
Sir, you did say that the guidance you have maintained on the revenue growth front and also on the EBIT margin front, it was the upper end 19% earlier. Now it's 18 to 19%. Are you being cautiously optimistic?
We are being realistic. So again, the quarter one is at 17%. It was, by the way, the same 17% in the last year's June quarter as well. So we have seen this 70% levels before in the base. Our seasonality is that Q1 typically tends to be the lowest and Q3 tends to be the highest margins. That is driven by the software peaking in revenue and in margin terms in the December quarter. So there is that seasonality which we will see, and Q2 and Q4 are typically near the the margin band that we typically aim for and target. So based on all the actions, some of the actions we've announced yesterday, and I'll come to that, and there are actions taking place for pretty much every line item of the P&L. So based on those actions, we remain confident that we will be back to the 18 to 19%. The actions that we have already announced are on the wage increments. So for the senior staff, we have already mentioned that there will be no increments in this year. And for the junior staff, to whom we typically give the increments in the first quarter, in the second quarter, effective July, they have been deferred to October, and we will make the decision in October how much increments are rolled out for the junior staff. But for the senior staff, there are no increments.
I mean, we are literally on it. We've invested for the last years, but we are now accelerating, and so investments are starting now. A significant part, the biggest part of those investments are organic. So it's investment that we are driving already now. I believe this month, as you know, we have shared this. We are going to train 100% of our employees. I mean, starting this month. When will it translate into revenue? It is already translating into revenue. We already have, as we speak today, dozens of programs around AI and generative AI.
The world's top electric car maker, Tesla, has submitted an initial proposal to establish manufacturing operations in India. Government sources have confirmed to Business Today TV that billionaire Elon Musk's iconic company intends to build a gigafactory with an annual capacity to produce about 500,000 electric vehicles. Chetan Bhatani joins in with more details. Chetan, tell us about Tesla's proposal and what it means for India's auto sector.
Well, Ava, after years of discussion, the world's top electric car maker, Tesla, has finally agreed to manufacture in India and has submitted an initial proposal which includes manufacturing 5 lakh cars annually through a gigafactory. Well, sources did confirm the price range, but yes, our sources have indicated that Tesla will begin with a reasonable price range as India is a very price-sensitive market. However, if this proposal goes through, remember, Tesla will become the 3rd largest car manufacturer in the country after Maruti and Hyundai. Well, sources have further said that Indian government officials will further hold meetings with Tesla on its localization plans, including identifying location of its gigafactory. Additionally, India may consider, sweetening the deal for Tesla in the form of a production-linked incentive scheme 2.0 or expanding the ambit of FAME 3. Remember, the FAME 2 scheme, however, collapses in March next year. So we'll have to wait and watch when and what the final proposal is. But yes, exciting times ahead for the India's auto sector.
Thanks, Chetan. Now, India has restricted imports of plain gold jewellery and articles as the world's second largest consumer of gold tries to plug loopholes in its trade policy. Import of articles of gold have been put under the restriction category from the free category, according to a government notification, adding that import under the India-United Arab Emirates Comprehensive Economic Partnership Agreement would be allowed without any license. For more on this, we're joined by Tina Jain. Tina, what do these restrictions mean? Will this make gold jewellery costlier ahead of the festive season?
The government's notification has said that from now on, importers will have to take permission or a license from the government for importing plain gold jewellery and articles into the country. It also added that the cap will not apply to imports made in accordance with the free trade agreement between India and the UAE. Will it lead to an increase in gold prices? Well, gold is largely governed by external factors and shows an inverse correlation to US yields, with the US Federal Reserve announcing successive interest rate hikes and the Reserve Bank of India keeping a close eye on soaring retail inflation domestically. Gold prices have already witnessed a remarkable global rally this year. However, the domestic move of putting restrictions on plain gold jewellery will not have much impact on gold prices, especially considering the fact that India is a major importer of raw gold and not of jewellery and articles. However, overall gold prices are expected to go up during this festive season, not because of this recent domestic move, but because of the external and global factors.
The 28% GST on the entire turnover involving online gaming, casinos and horse racing was a unanimous decision by the GST Council and would not need a review. And while the centre is open to discussing concerns with online gaming companies, there's no room for a rollback of the tax. That's the word coming in from Revenue Secretary Sanjay Malhotra in an interview with Business Today TV's Karishma Sudani.
Madam Finance Minister has reiterated that it has been a unanimous decision. I'd like to understand from you what has been the major motive behind this. Is it the social angle? Is it the revenue angle?
Yeah, so first thing, see, it is only a reiteration, as you said, or a confirmation of the earlier stand of the department that online games, when played for stakes, as opposed to online games, not played for stakes, will be taxed at the rate of 28%. There was certainly a consideration, because when we are imposing any tax, considerations of equity and fair play and what other similar activities, how they are being taxed and at what rate is important. And so if you compare online games with entertainment, even if you compare it with entertainment, some of the entertainment activities like entry into sporting events, for example IPL, or just the mere entry into a casino or into a horse racing club, these also attract a rate of 28%. And in fact, some of the members even compared the tax rates being presently paid by the online gaming companies, which effectively worked out to only about 2 to 3%, with the tax rates on food, which even a common citizen consumes and pays taxes on them, where the tax rates are of the order of at least 5%.
Right.
If not, for some of them it goes up to even 18%, as you are aware. So in line with that, certainly yes, the social angle, the social dimension, the equity angle, all these things were considered, and you are aware that this has been a deliberation which has been going on for a very, very long time. So it was a well thought out decision. It was taken after due consultation with all the stakeholders, including the casino industry, the online gaming industry, and keeping the overall public interest in mind.
Great. You did mention about the casino industry, and I'd like to just get some information on this. Now, Goa and Sikkim, these two states, there were early reports that they were against the decision because, of course, casinos gets their maximum revenue from their tourism aspect. Was there some kind of discussion on if they would be helped in some other way, or were they okay going ahead with the 28% on whole?
No, all discussions relating to all the three games, three activities, that is online gaming, horse racing and casinos, all these were considered.
As Prime Minister Modi begins his two-day France visit, all captains of India Inc., including Hari Bhartia, co-chairman of the Jubilant Bhartia Group, Rahul Bhatia, co-founder of Interglobe Aviation, and Sudarshan Venu, managing director of TVS Motor Company, are likely to attend the India-France CEO Forum. Prime Minister and French President Emmanuel Macron will interact with CEOs from both countries as part of the forum. The Surat Diamond Bourse is all set to open its doors to traders this November. Built to house over 4,500 traders, the hub is offering swaps to Mumbai-based traders. BTTV's Rachna Dhanrajani brings us this exclusive report.
Mumbai is set to lose its shine as the diamond trading hub of India to Surat, the city that is famous for polishing the gems. Prime Minister Narendra Modi is slated to inaugurate the Surat Diamond Bourse, a sparkling new addition to the already famous diamond processing hub, later this year. The Bourse has been built to house about 4,500 offices for diamond traders. As of now, only 20% of the offices have been sold, prompting the Bourse to step up efforts to woo Mumbai-based diamond traders. Business Today TV has accessed a letter sent by SDB to members of the Bourse, asking them to close down their Mumbai office and move to Surat. SDB has offers for those shut and move before the opening date, and also for those who decide later. Though Surat is the largest hub for cutting and polishing diamonds, over 98% of the diamond trading and export business is conducted out of Mumbai.
So in BDB, maintenance is only 1 rupee. This maintenance will be free for 1 year, but BDB has only one rupee maintenance, which is technically free for life, which is almost free. That is one. Surat has, all around Surat has about 10,000 offices, different areas. The whole of Surat is full of diamond offices. They should consolidate. They should invite and give the special soaps to the people in Surat to come and start first in SDB, then to talk to the people of Bombay to come from Bombay to Surat. First, let the people of Surat move there.
They offer a free membership for a year for those who make this move before the opening of SDB, along with their names being framed in the reception area of the newly constructed Bourse, and those who move later will get their membership fees waived for 6 months, along with the mention on the board in the main area. Will these incentives lure the diamond traders to the diamond city Surat in less than 4 months? The clock is ticking for Surat to shine bright. With Rachna Dhanrajani, Bureau Report, Business Today Television.
Shares of Patanjali Foods hit a 5% lower circuit today after the company launched an offer for sale at a floor price of 1,000 rupees a piece, which is at a discount of around 19% to the previous day's close of 1,228 rupees. The offer for sale is to fulfill a legal requirement of a minimum public stake in Patanjali Foods. And promoters who own 80.82% stake in the company, that will be lowered to 75%, meaning a reduction of 5.82 percentage points. PVR Inox has announced new pricing offers for food and beverages for the weekdays and weekends, saying this will bring down F&B spends of customers by as much as 40%. Food items ranging from hot dogs to burgers, popcorn and sandwiches, beverages and exciting combos starting at just 99 from Mondays to Thursdays from 9 a.m. to 6 p.m. Weekend offers also include unlimited popcorn refills. That's where we leave it on the show tonight. Thanks so much for watching.